So we will go through how to start a real estate business, but more so how to set up an LLC, the benefits of creating an LLC, the different business formations outside of an LLC. And then I can show you guys how to actually go through the process. Ooh. All right, so an LLC is just a type of business structure that is a pass-through for taxes, whether it's a partnership or a sole proprietorship, which is what most people are considered. So when you file your taxes, you use your social security number on your Schedule C and not an employer identification number. So one reason or a few reasons to set up an LLC, it separates your business from yourself or the owners of the LLC. It creates a barrier and some for liabilities from the owners, and there's different kind of management structures. So you can be like self-member managed, or you can have an actual like business manager. But most people do it for the tax purposes. Like I said before, sole proprietorships are if you add your social security number, or when Red One sends you the 1099 at the end of the year, if it has your social security number on there, you are considered a sole proprietorship. It's really easy to start because it is just you. There's no separate entity. There's no benefit on liability. Everything would be against your own personal social security number. So if someone sued you for whatever reason for real estate, they could come against your personal assets. And then it just taxes your individual income and not separate it on a different schedule. Partnerships are typically 2 or more people, and the liability is shared amongst the partners, and it is another pass-through organization. And then there's corporations. There's like you have Walmart and Amazon. Those are considered corporations, C corps, but then there's also an S corp, which I'm not going to go into corporations because that is a whole another topic that we could spend an hour on. And there are some tax benefits to have an S corp or a C corp. Advantages of an LLC, again, so it protects your personal assets from your business assets. And this goes for even just if you have your own personal business outside of real estate, people would not be able to come after your personal assets, but would actually have to go after the business assets. It provides credibility or professionalism, especially when you are doing things such as opening a bank account, or if you decide to do something more with your real estate LLC. I have a second LLC that is geared towards just flips, investments, and property renovations. It allows, again, for flexibility and ownership and management. I have several businesses, but another one being there's a group of people and we all have an ownership percentage in the LLC, so we all share in the profits and the losses. We haven't experienced losses, but you share in the profits based on your ownership percentage. And it is easier to raise capital in the case of like investing in real estate. It allows us to show legitimacy when we go to either raise private capital or if we have to go to a lender. The disadvantage is paying self-employment tax. So if you work a W-2 job, you see Social Security taxes come out on your checks. So your employer pays part of that and then you pay part of that. But when you are considered self-employed or you have an LLC, you pay all of that. And then there are certain state taxes and city taxes that you'll still have on the income. And it is a little more difficult to manage if there's more than one person in an LLC. Step by step. So you would start by choosing a business name. My business name is Matchmaker of Real Estate. It goes along with the logo that Dana created for me and the tagline that Mark and I picked for me a long time ago. You can also appoint a registered agent. That could be yourself, or it could be a company that creates businesses on the Ohio Secretary of State website for you. And on the Ohio Secretary of State website, you would file an articles of organization with the state, and it is a document that they would email you once you're approved to operate as an LLC or one of the many other partnerships or corporations. And then you could create an operating agreement. You do not need to do that if it is just for yourself, but if you are in business or have an LLC with multiple people, that is when you would create an operating agreement. And you would need to then obtain an employer identification number, which is like a social security number, but for your business. When you go to the Secretary of State's website, there is a place to check business names, and I will pull it over so we can see. So if I search for my business, oh, I need to refresh. I'm sorry, guys. 1 second. It needs to verify that I am a human again. So when you go here and you search, you do have to verify that you're a human. And then it would tell you, so here is my business, shows when I created it, and that's the LLC that I use, and that when I file my taxes, and that is also the LLC that Red One sends my 1099 to. Let's see what else. So there are a lot of investment group LLCs, and what it will do is it'll just pick up anyone that has that name. And so what you want to do is be very careful. You can submit this. Let's say you spelled out the word one instead of the number one goal investment group. They could deny it because there's already someone with an LLC name very close to the one that you've also selected. So I would try to be very detailed when you're doing your search to ensure that your entry would be approved. Next, a registered agent, again, so that could be yourself, a person, or a business that would receive all of your official documents. So a lot of times there are companies that wait for new businesses to be created and they want to sell them different services or sell you employer posters that state the Ohio employer laws and minimum wage. You do not need to purchase those. You do not need to buy them. These people, or they may try to sell you a copy of your certificate of art or your articles of organization. You can also get that in your email once you're approved, but these people just like to send emails and make money by confusing people. Articles of organization, when you are entering your information on the Secretary of State's website, they want your business name, the registered agent, again, that could be you or a company, an address for the place of business. Now this will be posted and available for anyone that searches your business to see. So some people, I don't use my personal address. I have a virtual mailing address so that if anyone were to look me up, or send me mail, it would go to my virtual address. It would need your information, and if you were member managed or manager managed. And it is all on the form, and you can take your time. You can see it before you submit it. You can review all of that information. Operating agreements. Again, this is only if there's really 2 or more people in the LLC, but ownership distribution, percentage of ownership. It would explain how you would share profits, share losses, the structure, if you have like a president, vice president, secretary, treasurer, all of that would be spelled out in there. The process for decision making, and like if you need to go through arbitration for conflict resolution, if you guys need to take a vote, those kind of things. So also probably never a good idea to do 50-50, because then for conflict resolution or even process for decision making, you would have a very difficult time if it was 50-50, since no one has majority ownership. An employer identification number that is provided by the IRS. It is something you will need if you file a Schedule C under your business name, or if you open a business bank account. Business bank accounts are not required. You could still have an LLC and open a personal checking account. That's free. Usually business banking accounts have a monthly fee attached unless you have some kind of minimum in there. And then I also have that for you guys. So on the IRS website, apply for employer identification number online, determine if you're eligible, understand the application, and then you can click apply online. I will not do all of this because you do have to put in your social security number. But just to give you an idea, it tells you to pick one of these. And at that point, you should have determined that you are an LLC when you created your articles of organization. And you do need that so that your business name is approved by the state before you create an employer identification number. And then it just confirms and tells you what it is not for the one that you selected. You can also click here if you just want to double check. And then it has all the different business types. It is a little overwhelming, but you can click into any of these to see what they mean. And then it'll explain each of the business types.
Hey, Malika, could you go back to the previous screen? Just, I just have a comment. So actually the previous one from that.
Okay. This one.
So I'm just trying to give some advice here. So, a few years ago, I went to do this and I clicked the wrong box. I clicked sale proprietor.
Mhm.
And then I think it was the one I hit. And then, yeah, I think that's the one. And it kind of got me into like a little hiccup where they said, oh, we need to start reporting like sales tax. And like, I don't have a business. Well, you check that box, but I'm not it thought that I was like a retail provider and I was like selling items. So just make sure that if you click this, that you're really cautious and pick the LLC one. So that's just some advice from a few years ago when I kind of screwed that up. And it took me a while to get that resolved, but just keep that in mind.
Thank you for sharing. I did not know that.
The other thing that I would add in is Malika had mentioned that there's those companies that try to get you to like buy their stuff. And it seems like, oh my goodness, you definitely want to buy this. But as she said, you don't need to. But I fell for it once. I'm like, why in the heck did I spend this money? It's like, but you know, when you read it, you kind of like react.
It's similar to like when you buy a new home. I know when we closed on our house that we live in now, the mortgage company and the title company, they said, you know, people are going to come after you and tell you that they'll print your deed or print just documents that are publicly available. And so because they have, you know, just technology running on the back end and their systems that, you know, recognize all of the new businesses or new home purchases, that is how they get people, and people think that it is legit. It does look legit. It is legit. They do give you the documents that they are charging you for. It just, you could also get them yourself for free. So if you guys ever do this and you have questions, feel free to reach out to any of the leaders and ask. You can snap a picture and send me an email or a text message, and I'd be happy to tell you if it's right or wrong. Most likely, you should not do it, because, and I can show you how to do it yourself, how to get whatever document they are willing to sell you. So here, if it's just you can put 1. Most likely you will be operating in the state of Ohio. Gives you more information. I've read through this a lot, but I'd recommend you read through. It does tell you, like this will be on your 1040, which is your individual tax return. And depending on what kind of business, if it's a Schedule C, which is what you would file, a Schedule E is for rental properties, a Schedule F is for farming. That is not anything that we would need to do. It also tells you about if you want to file as an S Corp or a C Corp, you can feel free to click on all of these so that you know exactly what you're doing or what other options they're offering you. And I typically click to start a new business. I don't have any employees in any of my businesses. If this is for banking purposes, I would say if you already had a business with the Secretary of State and you then came back later at some, like, 2 months later, and you needed it to open a bank account, the business technically is already started, but you want to get it for banking purposes. Or if you're purchasing an active business that already exists, which I don't think is our case. And then this is where you would enter your personal information. So I will not do that on the screen. And then if you were to hire a registered agent, they would click this button that they are a third party applying on behalf of the LLC. But you're already halfway through. So I am 100% confident everyone could do this on their own, or feel free to text or email me and I can help walk you through this. As you're doing it, it takes less than 10 minutes, but people charge upwards of like $100 to do this for you. All right. So benefits of an EIN, again, once you have your EIN, you can start a bank account. I like this so that I can keep all of my real estate transactions separate of my personal transactions in my bank account. I use my debit card a lot to run my household and my family. So for me, I like to have 2 separate bank accounts. Now I know everyone doesn't have that, and some people are a lot more diligent about going through their bank transactions on a monthly or quarterly basis. It is all personal preference. I'm always of the mind, if I ever got audited by the government, I would rather just give them all of my banking statements from just my business instead of personal and business all combined in one. Again, it adds credibility for your business or your partners if you're doing things outside of just the typical real estate where you're helping buyers and sellers. And then it also protects your personal information, so you're not using your social security number.
You recommend that for a credit card as well?
If you like use a personal credit card for real estate.
I mean, right
Okay.
now I have a credit card that I use mostly for everything, including my business expenses.
If you're diligent enough to like track it, then have at it. I just have a lot of transactions every month, so for me, I don't like doing it that way. But if you had a personal card that you wanted to dedicate to real estate, you could do it that way. If you need to use it for both, just make sure you're, organizing the expenses at the end of the year or throughout the year, so that at the end of the year you can keep those separate and make sure that you're really counting all of the business expenses and not missing anything. Because that's
Okay.
one thing. Every time you you're able to show that you have expenses, it reduces your net income and you end up paying less taxes. So that's really the benefit of keeping them separate. Even it doesn't matter how you do it. If you have a shared bank account and that works for you, just count as much as you can. That's legit to real estate. I'm not
Gotcha.
saying like if you got gas to write that off on your real estate expenses at all, because that's not a good idea. I advise against doing that.
Gotcha.
And then there's self-employment taxes, state taxes, and then these estimated taxes here. So as an LLC, you should pay quarterly estimated taxes on your estimated income. So if you made $1,000 for the quarter and then you had $200 in expenses, you should pay taxes on the remaining $800. Again, there's a website for the IRS where you can make those payments, and then I usually just save them as a document by quarter, and then I enter those in the correct place on when I file my taxes, so that it knows that I've already paid some of the taxes that are owed at the end of the year. Since we are not W-2 employees, we don't get our federal and state and city taxes taken out throughout the year. And then deductions and credits.
So one
So
thing
I
on
haven't,
one thing
Go
on
ahead.
the estimated taxes is the first quarter is due kind of like you would expect after the first quarter. The second quarter is due actually in June, and the third quarter is actually due in September. And then you kind of fall back into your normal. But that was a surprise to me because I had forgotten that they were due June 15th this year. And I'm in July. And I'm like, oh, it's middle of July. I better do my quarterly. And then I'm like, oh, shoot.
Yes. So I will add those, like the little chart that the IRS provides. I will add that in here. I would say to that, they don't know when you earned your money. Again, not telling you not to do it, but like in Sheila's case, if Sheila paid it in July, like she at least paid it when she gets the credit for it on her when she files her taxes. If you still owe taxes, there, depending on if you file your own taxes or if you have a tax preparer or an accountant that does it for you, there is a place where you can kind of write a small story to explain maybe why you still owe taxes if they were just from the fourth quarter and you were paying them in April as planned. The IRS has the ability to waive any penalties or fees, but there's no way for the IRS, unless you're audited, to know exactly how much you made each quarter, to know if $100 was enough or $200 was the correct amount. So don't be too afraid, Sheila, but also
Yeah, I just think that by the end of the year, I should make sure that I'm caught up.
yes, but also disclaimer, you should consult with your tax
Yes.
professional on what you should do, but I'm just telling you because I do our taxes, that there's nowhere in the tax software that says that I made this much and I owed this much in taxes, but I only paid part of it, or I overpaid. They're not going to give you any credit for overpaying either.
Hey Malika,
Yes.
I have been considering funneling all my commissions and any monies made from real estate through my LLC bank account and paying myself on a payroll. Do you have any experience with that or recommendations, or is that a good idea or a bad idea? What are your thoughts on it?
My recommendation, besides talking to a tax professional, is if you make more than about $40,000 a year, 40 to 60 is what I give that range. Then you can elect, there's a form where you can elect to be considered an S Corp if you are going to pay yourself a salary. So you have to pay yourself the same salary every month as you would like if you were a company, like a corporation. And then whatever you leave in your business, you don't pay taxes on. So let's say you made 100,000 and you paid yourself 90,000 throughout the year, you would only pay taxes on the 90,000, and then the 10,000 would just kind of sit there until you depleted that. Maybe the following year you made 150,000 and you paid yourself 160,000, then you would pay taxes on the 10,000 from the previous year and 150 from the current year to make the full 160. So just be very careful. That is the only recommendation I would make, is if you make more and you have a consistent business where you can pay yourself the same amount every month. A reasonable salary is what the IRS calls it. So reasonable to one does not mean that it's reasonable to the IRS, but if you're able to kind of prove it out, then you'll be fine. But
Okay, the reason I'm considering it is because just to be able to show, you know, as far as like, especially with lenders, pre-approvals are a big thing. People that get paid commission, especially, it's harder to prove or provide evidence of your income. A lot of times they have to end up doing bank statement loans and things like that, which can require a higher down payment and stuff like that. So just for future reference, like next time I get ready to buy a house or something, I was just considering to just set it up that way so that I have consistent, you know, biweekly or monthly paychecks that I can show to
yes.
you know, when I'm going to get financing for something. I just thought it might be a little bit easier in the future rather than having to provide like 2 years of bank statements and go through that whole rigmarole.
Absolutely. So also when you file as an S corp, it is not just on a Schedule C, it goes through another. You have to file a different kind of business tax return, but you can create yourself pay stubs based on your salary. And so when you go to apply for a loan, definitely you can provide them copies of those pay stubs. Your LLC is a legitimate company, so they would take your pay stubs and not go back over 2 years of bank statements. So I would definitely recommend with the LLC you have established to have all of your commissions and rev share payments and all of those things to go through your LLC. All right, and then insurance, we pay E&O insurance through Red One annually. And again, bank accounts is another thing that I like. And you can do, again, I said personal in here, but just keep them separate unless you are much better than me and you are diligent.
I have a question.
Okay.
You just said something about insurance, that we pay for insurance through Red One.
Yes. Errors and emission insurance. I don't know
Oh,
if
that
it's
insurance. I thought you meant,
$1.99.
okay.
Yeah.
Okay. I thought you meant like health insurance. I was like, wait, I don't
No.
pay health insurance. Okay. Got it. Forget it.
No.
Okay. Carry on.
And then tax write-offs. So marketing materials. I know Dana and Justin and Sheila are really great at this, and you know, doing brochures and flyers, postcards, business cards, all of those you can write off on your Schedule C. If you do any kind of advertising like the KV Core, like when you boost property, or if you're doing social media marketing, if you have a website outside of the one that's provided by Red One, you can write all of those expenses off. If you get headshots, or if you pay for property photos on a customer's behalf, because sometimes Mark has recommended that we do that, we include that as like a service that we offer. You can also write all of those off. Home office expenses. So I have this that I'm sitting in is my dedicated home office. It is only used for business. So I write off. I just do the square footage, which is very simple. You write off $5 per square foot of your space. Some people like to write off, you take the full square footage of your home and then the square footage of your office, and you can write off your utilities, your home insurance, renter's insurance, your rent, your, like basically all of the things that are necessary to keep your home running. You can definitely write those off. utilities.
Malika, this is Nara, Malika.
Hi.
Like
Hi.
these don't go under the standard deductions. All these like the home insurance and utility bills and all.
Yes, so
Generally,
you do file it like as a standard like an itemized deduction, but most of these, like you can't write off your internet or your electricity on your taxes, but your rent or I mean, not your rent, I guess, on your mortgage insurance, yes. Interest, and then your property taxes, you do write those off anyways, but they only count if you itemize your taxes, which most people
so
don't.
how about the gas bills?
So when you write off your home office expenses, you are able to write off the percentage that your home office is of your total square footage of your property. So if it's an apartment and you use you have a 2-bedroom apartment and you use 1 bedroom for your office, and so you take the whole square footage of the apartment and then just see what percentage your 1 bedroom is of the total. And then you can write off that percentage of all, let's just call it 25%. Then you can write off 25% of your electric bill, 25% of your gas bills for the year as an expense. It's a little more complex, but you can write all of those things off. CRM tools, if you have, oh, sorry, Nara, go ahead. Did you have another question?
No, I'm fine. Yeah, thank you.
Okay. If you use another CRM tool outside of KV Core, if you have a separate, like a non-free email, so I have a email that aligns with my website, so I don't use like just a free Gmail account. If you have an accountant or a bookkeeper, or you have someone prepare your taxes and they charge more for, your Schedule C, you can write that portion off. All of our memberships, if you belong to a local realtor association, Columbus Board of Realtors, if you belong to NAR and you pay extra fees, you can also write all of those off. Vehicle expenses. So there's 2 ways. You can either write off your mileage or you can write off your car maintenance and insurance for your business portion. So in order to do that, you again have to know how many miles you drove throughout the entire year, and then how many were for business. I use the app called Mile IQ. So once a month, I just go through all of my trips and I classify them as business or personal. And then usually mileage is more than what you can write off for car maintenance, repairs, and car insurance. But again, you can kind of figure that out at the end of the year to see what's best for you. If you have tolls or parking when you're driving to and from different showings, or if you are meeting for coffee with a client, you can write off your food and beverage with the client. And let's say you did it downtown, you can also write off the parking as long as it was business related. Some people like to do client gifts. The IRS limit is $25. Do they know if you spent 50 or 25 when you wrote it off? They do not, but the recommendation is to follow the IRS limits. Food and beverage, you can write off 50% of the total of your meal with a client. So if you spent $100 on a client, then you can write off $50. All of our continuing education, license fees, which is really pretty much your first year, like for your test and your schooling, all of those things you can write off. Some people like to get first-time home buyer designations or other kind of certificates, go to conferences, seminars, all of those, as long as they are real estate related for your LLC, then you can write it off. Cell phones, like I have a business phone. If you travel for whatever, like if you took, let's say you went to a conference for real estate in Las Vegas, like you could write off your hotel and your flight. And if you rented a car, all of those could be written off. If you have an attorney or need legal advice for whatever reason and you don't go through Route 1, you could write that off. And then again, errors and omissions, or if you have liability insurance outside of the regular E&O insurance. And then I did include the websites for searching for a business and submitting business filings, and then the IRS website for creating an employer identification number. And that is the end of my presentation. Did anyone have any additional questions?
Does anyone use CPA for their LLC? Anybody on the call? Or does anybody recommend one?
Not yet. I haven't.
Reason I'm asking, thinking of more ways to, make more money and maybe do some investment properties or something like that. And I think if I start doing that, I probably want to get a CPA involved and just to make sure everything's on the up and up all the time.
Joe, I'll take a
I
note. Go ahead, Carla.
Oh, go ahead. I have a CPA that I've used for many years in our construction business and currently with the real estate, but they're in Newark. I don't know where you live.
Powell.
Not too far. There might be some closer, but I definitely would recommend taking referrals from people that you know are using a CPA for real estate.
Yeah, I was just it's like Justin just gave me a name here.
Yeah, Joe, that's
phone number.
contact info for Scott Lauka, who did a great job for me. So I highly recommend him.
All
I
right.
think his company is ESP Consulting or Financial or something, but he's a licensed CPA. I think he's got like 30 years of experience, so he's a good contact, good resource.
Does he do your taxes and stuff, or do you do that yourself?
I do that. I do those myself, but he has helped extensively with investment groups I've been a part of, and also I got my grandmother hooked up with him. She was having some difficulties after my grandfather passed away, and he got her all straightened out and maximized her deductions and all that good
Good.
stuff. So he's
All right.
great.
Yes, I
where is
recommend
he?
maximizing deductions.
Yes.
And he lives in Powell.
Oh, nice. Thank you.
You're welcome.
Any other questions?
How does that Mile IQ work?
See if I can. Let me see if I can pull it up online, and then I can share my screen again. So
Yeah, that's a great question because like I've used that app before, but I felt like it tracks like every single time I get in the car and drive somewhere. It's literally like, so it's like I don't know how to tell it to change or whatever. So yeah, whatever advice you have.
I don't, because you need to know how many personal miles you drive and how many business miles you drive. So I do not recommend turning it off. If
I
you
use QuickBooks, and it helps prep my taxes and tracks my mileage as well. And like every quarter or every month or so, I'll hop on and you flick right for a business trip, you flick left for personal trip, and you just look at the trips you've made that month and select it one way or the other, and then it tracks them over the course of a year. But Mile IQ is probably very, very similar to that, I would imagine.
it is. I usually just do it on my phone, but I know that's not going to help us if I show you what it looks like on my phone. It is very similar. I think it's $6.99 a month. I also write that off under like subscriptions. Let's go back to last year.
So what you're saying is when you're driving in the mile IQ, you can actually, like when you leave on a trip or whatever you're doing, you can go in there and flip it to business or personal.
After you drive,
Okay.
I'm going to share my screen. 1 second. So on here, I also, a lot of the places that I drive, I just save the addresses so it knows where I'm going, like dropping kids off at daycare, dropping them off at school, if we're going to Lowe's, if we're going to Chase. And it really tracks it. It tracks it by date. I drive a lot, so like 9 drives in one day. But I was able to, this is the mileage credit that I was getting, for one day was
So
over.
if you leave it on, it just automatically tracks all of your drives and you just tell it which one's personal or business.
Mm-hmm. So I think it's easy. You can also automate it so that if you make frequent, like let's say from home to the Red One office, you can set those as always being classified as business. Or if there are certain places that you're going frequently for business, I don't know, if you go to Staples a lot because you're printing things, you can automatically have those be classified as business.
I have Jersey Mike's appointments every other day with clients.
There you go. You could also do it that way. CPAs do cost money, but you can also write those off. So even if they're helping you, most of the time, the amount of money that you're going to pay, you'll save it in them helping you find deductions that you didn't think of.
Yeah, I don't need one now, but if I get into doing some more stuff with investment properties or anything like that, I might think about it.
I know an agent that might be able to help you with those investment properties in case you need someone to represent
Yeah,
you.
his name's Joe Wood.
There you go, Joe.
Homes by Woody. I don't know if you've heard of him. That popular dad jokes.
Is that your LLC name, Joe?
It will be.
Awesome.
I might just call it dad jokes and homes. I don't know.
All right. That's all I had. Let me know if you guys have any questions. You can also text me if you don't want to ask them here or email me or give me a call.